So on my journey to 100 million, a big part of my plan is building up and preserving my capital during this market downturn. But right now, with stocks plummeting and crypto plummeting, it's really hard to find a safe place to put your money to work. And because of this, lots of people are just sitting on their cash and waiting, but your money should always be working for you, and just keeping it in the bank means it's losing value because of inflation. Each dollar you have is like a little money robot that you can put to work 24 hours a day, 7 days a week. You send that little money robot out there and it'll go and it'll produce money for you. And the more little money robots that you have, the more money you can make. But letting those little money robots waste away in the bank is the worst thing you can do. They can't work for you. They can't go out there and make you money when they're held captive in this bank account. At the same time though, I don't want to go deploy my money into the market and then lose half of it just because the market ends up tanking further. So I'm kind of stuck in this tough situation where I want to put my money to work, but I don't want to, put it at risk. So what do I do? Well, that's the question I've been asking myself over the last 2 months. And during that 2-month period, I've been experimenting with some safe, stable ways to put my money to work so that it's not just sitting in the bank rotting away. All these strategies are what I consider low risk and extremely stable strategies. And of course, with low risk and stability comes a lot lower returns for the majority of these methods. But again, the markets are insane right now, and I just don't feel like it's time just yet to start putting my money to work in some of the more risky strategies out there. The first way I've been putting my money to work is through a crypto project called Overnight Fi. This strategy involves only ever holding a stablecoin, and after what happened with UST, I now make it a priority to understand how every stablecoin I ever interact with actually functions and works. If you don't know what happened, UST was an algorithmic stablecoin that utterly collapsed, causing a lot of people to lose a lot of money. And this happened because a lot of people, including myself, bought into this assumption that stablecoins would always be stable. And because of this, I had never actually taken the time to understand how stablecoins actually work. But after what happened with UST, I learned my lesson and have since done a deep dive on stablecoins, how they function, how they work, as well as the issues and problems with UST that caused it to collapse. USD Plus is the stablecoin for Overnight Fi, and it's backed 1-for-1 by USDC. USDC is considered the safest stablecoin there is. And a lot of stablecoins, including USD Plus, back themselves with USDC because of this. USDC is considered so safe because it's fully backed by US dollars or US dollar denominated assets. And the accounts that these assets are held in are fully regulated and they're audited every single month. By comparison, UST, the one that collapsed, was backed by Luna, and Luna itself, tied to the price of UST, was backed by nothing. Hence why UST was called an algorithmic stablecoin, because it was held up by an algorithm. It was a wild experiment in finance and economics, but it was a completely different animal than what we're talking about with USDC. Anyways, back to UST Plus. It's a stablecoin that pays an ever-changing yield based on what it's able to produce, running a series of complex yield farming strategies. Whatever yield they're able to produce with these yield farming strategies gets passed on to the holders of USD Plus via a daily rebase. And they're actually super transparent. They show you on their site the exact ways that they're producing this income. And last I checked, every single one of them was a stablecoin strategy that was super low risk. And technically, all these methods are methods that, anyone could do on their own if they had the know-how when it came to yield farming. What Overnight offers is just simplicity for anyone who doesn't know how to do these strategies or doesn't want to have to manage them themselves. And with this strategy being super low risk, the returns reflect that low risk, as they're not the highest returns out there by a long shot. With Overnight, I deposited $1,309 at the start of June, and so far after a month, I've made just $10. Meaning I'm earning about 8% annually with this strategy, which is decent considering how deep of a bear market we're in and considering how, low risk this strategy is. And by comparison, the return of the stock market so far in 2022 has been negative 13%. So in contrast, 8% with low risk is looking ridiculously good. If I were to put $1 million into this strategy, then after 1 year, I should make around $80,000, which is more than enough for me to live off of and cover all my expenses. Strategy number 2 I've been using is Penrose. And this strategy as well involves purely using stablecoins, making it extremely low risk. And the two stablecoins I used was USD Plus and USDC, meaning extremely low risk stablecoins. And with this strategy, I took $8,600 and I split it into two different positions. I put $4,300 into USD Plus and I put $4,300 into USDC. And then I took that $4,300 of USD Plus and that $4,300 of USDC and I deposited it onto a platform called Dystopia. And when you deposit liquidity onto a platform like this, they give you in exchange something called an LP token, which is basically just a receipt showing that you're the owner of that liquidity. Now, the normal way to profit off this liquidity would be for me to take that LP token, stake it on Dystopia, and then I would earn token rewards from Dystopia for doing that. But there's actually a lot more efficient way to do this where I can earn even more rewards. Instead, I took the LP token and I deposited it onto Penrose. This allows me to get the Dystopia rewards like normal, but I also get rewarded in a second token called Pen. And if you're wondering what each token is used for, Dystopia's token is used to vote for who gets access to liquidity on Dystopia. Liquidity is a super important part of DeFi that's crucial for a project's survival. Penrose's token allows holders to get a share of the LP earnings, as well as allows users to decide how Penrose uses its votes on Dystopia. And so far, over the month that I've had my money working with this strategy, my $8,601 has now turned into $8,651.21. Plus, I also have $22.89 in unclaimed rewards for a total of $8,674, which in total amounts to about 10% annually using this strategy. And keep in mind, during this experiment and during Overnight 5's experiment was when Bitcoin dropped from $30,000 all the way down to $19,000. And even though the entire market was just getting hammered, I was still able to make money, I was still able to make a profit, and I didn't lose anything. And the cool part about this strategy, because I'm using USD Plus as half of my liquidity, I'm still earning those rebases for my USD Plus. So that $4,000 in USD Plus that I have in my liquidity is still getting paid out rebases from those yield farming strategies. And if I were to put $1 million into this strategy, then after a year, I should have made around $100,000, which again would cover all of my expenses and allow me to continue building my wealth. I'll also point out that with this strategy, my rewards got paid out in Pen and Dystopia tokens, both of which with the market drop got absolutely slaughtered. But even despite the drop, I was still able to make 10%. And since my money is not really at risk and I'm just, getting to accumulate these tokens, I've decided to kind of just hang on to them for the time being and see, if they are able to appreciate in value come the next bull run. The number 3 strategy that I've been using has been yield nodes. And I've actually been doing yield nodes since October of 2021. So at this point, over 9 months. And during that time so far, it's literally never had an issue and always been profitable. To date, I've never lost any money with yield nodes and I've made quite a bit of profit. And this strategy is quite a bit different than the other two as it doesn't actually require a token of any kind. You can actually use your credit card to get set up on yield nodes. You can send over Bitcoin and Tether as well. However you end up funding the account, they transfer the balance to a stable currency. And despite never having an issue with yield nodes and always making money, never losing money, this strategy still freaks me out. I mentioned in my last yield nodes video I made that I've done quite a bit of investigating into yield nodes, and I've had a team of people do investigations into yield nodes, and I've never once found any issues with yield nodes or any evidence of wrongdoing. I've also had the opportunity before to speak with the head of yield nodes, and he seems like a nice guy, and he was always able to answer all of my questions. And maybe it's just me being paranoid because of how insane the crypto markets have been and how many crazy scandals have come out lately. But for whatever reason, yield nodes just kind of sketches me out. I've tried really hard to understand how yield nodes actually produces its yield, and to date, I still cannot understand or comprehend how they're actually making this money that they're paying out to all the depositors. And maybe, in a bull market, it was easy to believe because a lot of people were making a lot of money during the bull market. But now that it's the bear market and they're still paying out pretty high yields, it becomes a lot harder for me to accept or believe. 6% is what I made in June. And, the other strategies I was talking about, making 8% annually or making 10% annually. But I made 6% in a month with yield nodes in June, which is around 72% annually with this strategy, which is extremely high considering the current market. So for me personally, I'm just very skeptical and being extremely cautious when it comes to yield nodes. To be completely fair though, as the bear market has continued, I have noticed that the yield has been slowly dropping. So it's possible there's just a lag in the yield and eventually it'll catch up with the current state of the bear market and just be, more in line with what you'd expect during a, crypto winter. And so far with yield nodes, 3 months ago, I deposited $20,000. For the first month, I made $1,857. For the second month, I made $1,539. And for the third month, I made $1,538 for a total of $4,934 in profit or $24,934. So again, nothing to complain about. And a lot of my skepticism and worry just comes from I don't understand how they're actually producing the yield for yield nodes. And that bothers me because one thing I've learned in crypto is if I don't understand it, I can't fully trust it. So currently, for my own personal strategy, I'm just not allocating any new funds into yield nodes during the bear market. Strategy number 4 is a brand new strategy that I actually just started 2 days ago. I'm not gonna say much since it's so new, but I will say so far it's one of the most exciting opportunities that I've found during the bear market. And right now, early results show about a 40% plus yield with what appears to be limited risk. This strategy uses a special trading bot, and it's quite a bit different and a lot more complex than a lot of the other strategies I've mentioned so far. And I'll share more details on it as the experiment unfolds. And that's it. Outside of these strategies, I'm holding on to a lot of different tokens that I just plan on holding all winter long and seeing what happens next bull run. I also have a lot of capital invested into Bitcoin and Ethereum as like a long 5-year play. I expect Bitcoin to average an APY of about 100% over that 5-year period. So if you take the APY, average it out over the 5-year period, I expect it to be about 100%, and I expect Ethereum to do about 200% average APY over that same 5-year period. In my mind, I think it's somewhat reasonable to assume that Bitcoin over the next 5 years will hit $100,000, as well as I think it's somewhat reasonable to assume that Ethereum will hit around $10,000 over the next 5 years. Crypto is cyclical, and we have some massive catalysts for growth coming over the next 5 years. At least that's what I'm personally betting on. So right now, during this season, I have a mix of safer, stable strategies, just putting my money to work. And then I have some mid-risk strategies that are kind of like longer term bets on like the future of finance. My entire goal with both of these strategies is in general capital preservation. I want to make sure I have money to invest when the market bottoms and I can pick up, really great projects at fire sale prices. And as always, none of this is meant to be investment advice. None of this is meant to be a recommendation. I'm just sharing the strategies and tactics and ideas that I'm personally using to get to my $100 million goal. I will 100% make massive mistakes on my journey. I can guarantee that it's not going to be a straight shot from here to 100 million. Failures and mistakes are how we reach our goals, and I don't expect to be any different than the average person in that I will make these massive mistakes along the way as well. If this video is helpful, make sure to hit that like button. If you have any questions or comments, or maybe you have some other cool strategies that you think I should experiment with or try out, let me know down in the comments below. And if you want to see more videos like this, if you want to see if I hit my $100 million goal, make sure to hit that subscribe button, but you got to also hit the little bell next to it. Hitting the little bell makes it so you actually get notifications each time I release a video. If you don't hit the little bell, then you'll never actually be notified when I release a new video. Thanks for watching. I'll see you next week.